Do you know what your fair tax rate would be if it were to become law? If you don't, you should. Hello, I'm John Gaver, author of The Rich Don't Pay Tax, or Do They? There are two questions that almost always come up regarding the fair tax when I do speaking engagements or talk shows. The first is something like, what is all this prebate business? And the second is along the lines of either, how much will I pay in fair tax, or what will my fair tax rate be? Now, I've chosen to answer both questions today because those two questions are effectively joined at the hip. You see, you can't determine your real fair tax rate without knowing your family consumption allowance, which, by the way, is commonly known as the prebate. So let's start by taking a look at the prebate. The family consumption allowance, as it's called in the legislation, is essentially a sales tax version of the standard deduction and the personal exemption that we currently have under an income tax. It's just two approaches to the same problem. Both are aimed at untaxing poverty level spending. But there are three major differences. The first is that unlike the standard deduction and personal exemptions, the family consumption allowance actually works. Now, imagine that. Something from government that could work. Now, this is because the poverty level is a measure of spending, not income. So with an income tax, trying to allow for various spending needs and habits is like trying to peel an apple with a fork. I mean, in both cases, you might be able to claim a modicum of success, but what you'll end up with will be a real mess. I mean, come on. It's an income tax. And an income tax is entirely the wrong tool to use in any attempt to account for different spending needs and habits. Now, by contrast, the family consumption allowance is based entirely on spending. And as you'll see very shortly, it accurately and completely eliminates the effect of the fair tax on all spending up to, but not over, the poverty level. Now, the second difference is that the family consumption allowance comes to you before you pay a single penny of tax. Under an income tax, you pay tax all year long by way of withholding. And then you have to wait till the next year to file your Form 1040 in order to take advantage of the standard deduction or the personal exemption. Now, the third major difference is that neither the standard deduction nor the personal exemption eliminates the effect of the payroll tax, which is our biggest tax. Nor do they eliminate the embedded taxes that are included in the price of everything you purchase. I mean, everything from buying a head of lettuce to paying your electric bill. So let's take a closer look at the family consumption allowance. Now, in order to give you a better understanding of how the fair tax untaxes poverty, we need to look at how the family consumption allowance, our prebate, is calculated. Now, we need only two pieces of information in order to calculate any family's prebate. All we need to know is the number of adults in the home and the number of children in the home. That's it. With just those two pieces of information, we can calculate any family's monthly prebate. So let's assign variables to these three items and then look at the formula. Now, this formula may look complicated at first, but it's really quite simple. You see, $12,060 is the 2017 Health and Human Services poverty level for one adult. So we simply multiply the number of adults in the home by $12,060 to determine the poverty level for the number of adults in the family. Now, $4,180 is the poverty level for one child. We multiply that number by the number of children in the home in order to determine the poverty level for the number of children in the family. Those two products are then added together to give us the combined poverty level for the entire family. Then to calculate the annual prebate for this family, we simply multiply the family poverty level by 23%, the FairTax cash register rate. That gives us how much tax a family of this size and makeup would pay at the cash register if they were spending at the poverty level. That is the amount that every family of this same size and makeup would get back each year, regardless of spending or income. Now, finally, to get to the monthly prebate for this family, we simply divide by 12 months. So now all we need to do is plug in actual numbers for A and C. So let's try it out. We'll use a typical family of 4 with 2 adults and 2 children. All we do is substitute the number of adults in the home in place of A and the number of children in the home in place of C. Then all we do is multiply the number of adults in the family by the adult poverty level, multiply the number of children in the family by the child poverty level, and this gives us the separate adult and child poverty levels for this size and makeup of family. So then all we have to do is add these 2 numbers together to get the combined poverty level for the entire family for this size and makeup. Now remember that the prebate is all about the size and makeup of a family and nothing else. So what this means is that if a family of 2 adults and 2 children spends only $32,480 a year, they're living at the poverty level for that specific size and makeup of family. So to determine the annual family consumption allowance, all we need to do is multiply that number by the tax rate that they would pay at the cash register, the 23% FairTax cash register rate. This is the amount of fair tax that a family of 2 adults and 2 children would spend over the course of a whole year if they were living at the poverty level. They would spend that much at the cash register, but they would get that much back even before they made a single purchase. So now all we have to do to determine the amount of this family's prebate check is to divide by 12 months. In this case, the family's monthly consumption allowance would be $622.53. That's it. That's how simple it is to calculate the family consumption allowance. Just 2 pieces of information and a very simple equation. And better yet, it's all automatic. The government calculates the prebate for you. They just plug in those 2 numbers into a database and it spits out a check or initiates a direct deposit or maybe charges up a prepaid debit card. But it's all automatic. The only form you will ever fill out under the fair tax is the annual form telling the Treasury Department the size and makeup of your family. Nothing about income, nothing about net worth, or anything financial. And remember that every family of the same size and makeup will receive the exact same prebate, regardless of income, spending, net worth, or anything else. The whole purpose of the prebate, our family consumption allowance, is to untax poverty level spending and for everyone. So now that we have the family's annual consumption allowance, all we need is one more piece of information in order to calculate this family's fair tax rate and also the fair tax dollars that they would actually spend. Now remember that I said that the fair tax rate is joined at the hip with the prebate. Well, this is why. Of what's on the screen now, the annual family consumption allowance is all we need, along with one more piece of information in order to calculate the family's fair tax rate. So let's get rid of the rest of this and put up that one more piece of information. We need to know the family's annual spending on new retail purchases of goods and services. And the word spending here is very important. That's because the tax and spend crowd fear, and I might add with good cause, that all the super PAC money that they get for tinkering with the income tax code at their constituents' expense will go away if the fair tax should ever become law. And count on it. most of that PAC money will go away. So the establishment keeps trying to obfuscate the many benefits of the fair tax by constantly trying to change the narrative. They do this by trying to tie everything concerning the fair tax back to income. But remember, the fair tax is based exclusively on new retail spending. Income or net worth makes absolutely no difference under the fair tax. So don't let the tax and spend crowd fool you with misleading terminology. With any tax system, a family may earn a little more or a lot more than they spend on new retail goods and services. They may put some of their income into savings for their retirement or for their kids' college education. They may buy a used car or a previously owned home. But under the income tax, the money put into savings would be already taxed. The money they spend to purchase any kind of used goods would also be already taxed. On the other hand, under the fair tax, money in savings is not taxed until it's taken out and spent. And even then, it's taxed only on new retail goods and services. That means that if a family buys anything used, that's not taxed either. Used items are not taxed under the fair tax. So there's absolutely zero chance whatsoever of double taxation. Under the fair tax, used items are not taxed. So that's why the word spending is so very important, and it applies to only new retail goods and services. But to get back to our calculation, once we know the family's spending level on new retail goods and services, we can calculate their effective fair tax rate. So like we did before, let's assign variable names for these two items and see how our formula looks. Now, we first have to determine what this family will spend in fair tax at the cash register over the period of a year. Now, to do that, we simply multiply the family spending level by 23%, the fair tax cash register rate. The resulting number is what anyone would pay in fair tax at the cash register, regardless of family size or income. Next, we subtract out the family consumption allowance from what they paid at the cash register. Now, this is to determine the family's net fair tax expenditures for the entire year. And remember, the family consumption allowance is just a sales tax version of the standard deduction and the personal exemption. They're all intended to offset cost of living expenses. And pay particular attention to the word cost in the phrase cost of living. Cost relates to spending, not income. And this goes back to why the standard deduction and personal exemption do not and cannot accurately eliminate cost of living expenses. But to continue, your true fair tax is the amount that you pay at the cash register minus your family consumption allowance, just like you subtract out your standard deduction from what you earn before calculating your income tax. Now finally, to determine the family's actual fair tax rate, we just divide the family's net fair tax by their total spending. So let's use some real numbers. Now for our example, we'll use a good round number for our household spending. We'll use $50,000. Good round number. So all we need to do is substitute the family's household spending for S in each case. Then we work out the formula. We multiply the household spending of $50,000 by the fair tax cash register rate of 23%. This gives us $11,500. Now, it's important to remember that anyone who spends $50,000 on new retail goods and services, whether they do it all at once in one purchase or in many purchases over the course of a whole year, regardless of family size or income, they would pay the same amount of tax at the cash register. But it's the family consumption allowance, the prebate, that reduces your total fair tax and determines your family's real fair tax rate, just like the standard deduction reduces what you pay in income tax and affects your real income tax rate. So we subtract the family's prebate from the tax paid at the cash register to determine the family's net fair tax paid over the course of a whole year. Now, in this case, we see that a family of 2 adults and 2 children who spend $50,000 a year on new retail goods and services would pay about $4,030 in net fair tax over the course of a whole year. But let's put this another way. You see, since taxes are about how much less money you have in the bank at the end of the year due exclusively to taxes, this amount is how much less money the family would have in their bank at the end of the year due exclusively to the fair tax. So ask yourself, how much less money do you have in your bank account at the end of the year due exclusively to the income tax? Go back through this video and plug in your own numbers into these formulas. Then do your own math. Compare what you get for this number with what you paid in income tax last year. By the way, that number can be found on line 63 of your 2016 Form 1040. But let's continue and get our final number. In order to find out this family's fair tax rate, we simply divide the net fair tax by the annual spending. In this case, it gives us 0.0806 or 8.06%. That's it. The fair tax really is that simple. In just a few seconds, with just 3 numbers, anyone can calculate what would be his or her family's fair tax, both in dollars and in the rate that this would represent. But as I mentioned earlier, the best part is it's all automatic. The government sends you the family consumption allowance each month based only on the size and makeup of your family. You spend the money as usual and pay the fair tax at that time. The net result is your real fair tax expenditure. It's how much less money you have in your bank as a result of the fair tax. No more embedded taxes, no more payroll tax, no more invasive audits ever again. In fact, no more IRS. April 15th will become just another spring day, and it's all automatic. You don't even have to do these calculations. I'm just showing you these calculations simply to give you an academic understanding of the family consumption allowance and how it affects your effective fair tax rate. So go back through this video, copy down the formulas, fill in real numbers for these variables, and do the math for yourself. But if you want, there's an easier way. We've created on our website the 2017 Fair Tax Rate and Real Dollar Calculator. You can find it at therichdon'tpaytax.com/calculator. And as with our example here in this video, it only requires 3 pieces of information from you: the number of adults and children in the home and the family's annual spending on new retail goods and services. Now, if you're in Alaska or Hawaii, you'll need to check one of the buttons over on the right, since the cost of living and likewise the poverty levels in those 2 states are higher. Then just click Calculate and you'll instantly see how much fair tax you would pay in dollars and the rate that those dollars would represent under the fair tax. And don't forget to click on each of the red buttons down below for more information on the calculation, including your prebate amount and how much tax you would pay at the cash register. I encourage you to play with the numbers. See what the numbers would be for you, for your parents, your grandparents, your children, or your siblings. I expect You'll be pleasantly surprised. I hope I've been able to clear up any questions that you may have had about the Family Consumption Allowance and any tax rate questions that you may have had pertaining to the fair tax. I'm John Gaver, author of The Rich Don't Pay Tax, or Do They? And the upcoming book, The Tax Deception. Check them out for more information on the fair tax. But whatever you do, please, please call your congressman, call your senators, and call the White House and ask them to support the fair tax, because the fair tax is the only tax reform plan that will absolutely abolish the IRS. Thank you.